out. I'm going to go to Pranoy in a bit. I'm going to wait it out. Hemant Tukral will join us and we'll take that conversation with Hemant and Pranoy forward in just a bit. Ruchit, I want to start up with you right now to talk about how the market is looking, given the fact that 7100 looks like it's under threat for sure. What are the supports and resistance that you're looking at for this market?
Good morning, Abba. Well, overall, we have seen last 4-5 trading sessions, markets have bounced from this lower support zone of 68.60, 68.70. However, overall, this low top, low bottom formation, I think, is still continuing. We have not seen any significant major upside. And January lows, which were there of 71.40, 71.50, has now acted as a resistance. So the support breached is now acting as a resistance, which is a bit sign of concern over here. But again, on the for next couple of days perspective, I don't think that all the markets have given a good correction from its high yesterday. But I don't think markets would give a sell off, show any sharp kind of sell off before budget. 7,000 to 7,200 is the range, I think, in which markets would play out for next couple of days. Around 7,000-6,980 if markets comes, I think just for another pullback up move, one can look to buy Nifty over there. Overall, the downtrend, however, still continues with the low top, low bottom formation. Post expiry, certainly volatility would be there since we are going to the budget on the Monday itself. And I think either on the day of budget or after the budget, we would see another leg of pullback move, which would take Nifty towards 7380, 7400. Now, if you observe medium-term charts, then 7380, 7400 is a big resistance, which would be very difficult to cross. From there, again, selling could resume. So hence, if anyone is trading from next 2 days perspective, from expiry perspective, I think it's going to be a quite range-bound activity from 7,000 to 7,200. Markets might try to test the lower end of the range, 7,000, 7,050 range. In case if we get Nifty around 7,000, 6,980 range in this next couple of days, then from short-term perspective, look to buy for another up move, up leg up to 7,380, 7,400.
All right, Bank Nifty, Ruchit, I want to probe up that one because 14,000 was lost in intraday trade, but that's more of a round figure coming in. On the Bank Nifty, what are the critical levels you're watching out for right now?
Comparatively within this indices, Nifty and Bank Nifty is more weak. It has not shown any signs of pullback. First, if we specifically see the heavyweights of the banking sector in last pullback move, since last 4-5 days we have seen some pullback move in the markets. We have not seen any pullback, any significant pullback moves in any of the heavyweight banking stocks. May it be HDFC Bank, Kotak Bank, SBI, Axis Bank. We see in spite of markets giving a pullback, they are showing signs of consolidation. So I think Bank Nifty would continue to consolidate. 13,770 is the support for the Bank Nifty and 14,600 is the resistance for the Bank Nifty. We have already seen last 9 trading sessions this Bank Nifty consolidating within this range. We are expecting this consolidation to continue. Even in the next up move, when the markets give another leg of up move post expiry, then also I think this sector would continue to underperform the overall market. So one should not create any long positions in the Bank Nifty. Continue to stay cautious on the banking front. Any rise up to 14,600 would again be could again be an opportunity to create short positions over there.
Within the Bank Nifty, Ruchit, what's looking weakest to you in the components? Because PSU banks have definitely been taking the knot, but ICICI as well struggling at 192, took a knock of almost 3% in trade yesterday.
I think the mid-cap PSUs would continue to underperform the overall markets. Although the heavyweights might not show that big correction since we are expecting a range-bound movement, but mid-cap PSUs have not shown any kind of strength or any kind of reversals over here. So I think mid-cap PSUs such as Canara Bank, Bank of India, Union Bank, these stocks would continue to show weakness and they would continue to form this low top, low bottom formation. So any rise if it comes in the Bank Nifty around 14,600, I would look to short this mid-cap PSU banks.
HDFC, not the bank, but HDFC. Ruchit, if you could pull up the charts for us and ask that question because it's a very closely held FII counter as well, a lot of fund investments there, but it's languishing at a 52-week low and not really moving anywhere. What are the levels in HDFC that you can tell us?
So SDFC has got good support around 1020, which is about another 3% away from its yesterday's closing. If you observe, then around 1020, there is a falling trend line support coming in. Also, the previous up move, which was there from 1090 to 1350, 127% retracement of that up move is coming around 1020. So there are couple of support theories which are coming, which are indicating that the stock might show a pullback move again from 1020. So I'm not that very bearish on SDFC Limited from current levels. Definitely we might see another 3% correction from here up to 1020, from where again a pullback move could be seen in SDFC Limited.
All right, HDFC Limited, that's what's happening. Quickly pull up SGX at this point and see how it's doing in trade. If there has been any movement, it's very slowly edging lower as well. 7103, a very flat trade. Volumes are also quite muted in trade today. We've got the dollar index set back at 97.49. Ruchit, if you've had the chance, look at a rupee chart as well. Because we've gone very close to record lows and come and retreated quite sharply from there. How is the rupee chart looking to you?
The rupee chart, if observed on charts, it is forming an impulsive up move, and if I take a bit longer term time frame data, then this is now the wave 5 of this up move. So usually this wave 5 is the last wave in any impulsive trend. So I think that's all-time this low in the rupee, which was there around 6,800. Around 69.80, I think those would be breached once. It would go marginally above those levels, and then again it would start correcting from those levels. So as of now, until this fifth leg completes, I think rupee would continue to remain under pressure, and it's quite likely that the all-time high, which was made around 69.13 or so, that would be breached once.
Okay. I want to talk about some of the mid caps that have been in focus as well, especially on the side of the budget stocks that remain in focus. Let's pull up the likes of a Mahindra and Mahindra right now, as well as a Maruti on the large cap, and see how they've done. Because auto has a two-pronged thing. So you've got the rural boost that are likely to come in, but the worries from the diesel tax as well that starts to play out. Ruchit, how auto stocks, specifically Maruti and M&M, to you right now?
But overall, if we observe the charts of the auto sector, then the stocks within the sector are showing showing some sort of divergence. We are not expecting the entire sector to move in a particular direction. But I think among the stocks which you have just named, Mahindra and Mahindra continues to look positive. We have seen it almost in the last 10-12 months. The stock has traded in this range of 1080 to 1420, 1450. So now the prices are quite close to the lower end of the range, and in spite of markets correcting sharply in the last 10 months, this stock has shown a time-wise sideways correction rather than a price correction. So if the stock is at the lower end of the range, definitely there are chances that the stock would again move towards the higher end of the range. So unless this range is broken on the lower side, which is around 1090, one should definitely trade with positive biasness in M&M. There are chances that if 1250, 1260 is taken out, then the stock might rally even up to 1350. So I would trade with positive biasness in M&M within the sector. On the other hand, Maruti has not yet shown any kind of reversals. This last 2-3 months low top low bottom formation is still continuing in this stock. Even last 2-3 trading sessions where we have seen bounce back in the markets, this stock has not shown any kind of major pullback move. So this stock would continue to remain under pressure. So it would be buy in M&M and sell in Maruti is what one can go for a pair trading for next few sessions.
Eicher Motors, where does that fit in? Because this is an outperforming stock this year, Ruchit. I mean, how often do you see, and it comes into the Nifty as well, so it has that added. It's a very expensive stock, 19,000. You may see a split in that one, given the importance of it moving into the Nifty as well. But 9% up on a YTD basis.
So if anyone is having a time frame of more than 6 months, then I think it's a good stock to buy. Overall, the stock has been in a range, and from the lower end of the range, the stock has shown a pullback move. quite possible we may see a corrective leg up to 17,500, but on percentage terms, if we see, then it's not that big correction. So I think if it comes around 17,500, it would be again a good opportunity to create long positions in Eicher Motors. But definitely it's not a short-term stock where, within 1 week or so we could see a major trended up move. It would take some time. So if anyone can keep a time frame of 6 months or more, then it's a good buy around 17,500 to 70,800 range.
Ruchit, one stock that is confusing me a lot, given the fundamentals, is JSW Steel. It's outperformed the index, it's outperformed the mid-cap index on a YTD basis. It's now trading at a 52-week high. What's happening with JSW Steel's charts?
So in spite of whatever fundamentals tells us, I think we have to give more importance that how prices are performing over here. The prices are definitely from last 3-4 months are making high top high bottom, and the stock which is outperforming the broader benchmark indices, and even this sector, if you see, the metal sector has not done that great in last few months, but this stock has been forming this high top high bottom, and also during this up move the volumes are increasing in this stock. So that's a positive, definitely a positive sign for the stock. I think the stock has potential to move further higher up to 1250. So I would continue to trade with positive biasness in this stock unless we see any signs of reversal. There is a possibility that this stock would continue to outperform the other metal packs and the entire market as a whole. And on the higher side, 1240, 1250 would be the target where some sort of profit booking could be done.
All right, that's the call coming in right now on JSW Steel. Hemant Tukral also joins us. It's going to be hectic 48 hours for all watching the derivative screen as well. Pranoy joins in this conversation to take us through. Before I head to Hemant and get a sense of what's really happening, Pranoy, take us through the active F&O stocks and the rollovers that you're seeing. Where is the maximum rollovers that you're watching right now?
Well, the rollovers are in line or on the higher side, and if you talk about the benchmarks itself, we've seen a big fall. Of 7600 was the high in this series for the Nifty, and we are right now at 7100. So despite the kind of fall that we've seen only a small recovery in comparison to that. 1500 points lower on the Bank Nifty is where we are, and even if you talk about different sectors, FMCG is down 4.5, tech is down 5.5, pharma is down 3.4. If you marry this data with the VIX, which has gone up 38% on a series to date basis, as also the roll cost and the kind of FII ratios that remain skewed on the lower side, the possibility of greater short rollovers is more here. Having said that, chemicals and fertilizers, the top sectoral rollovers, followed by FMCG at 58%, IT at 57%, then you've got pharmaceuticals and banking to follow that at 52 and 51% apiece, and of course then you have auto and auto ancillaries, oil and gas and metals, but mostly there is an expectancy of greater short rollovers going ahead into the new series, and this is no exception from the past two series also that we have seen.
All right, thanks for that, Pranoy. Stay on. I'm going to pose that question to Hemant, and I'm sure you have a few as well for him. Hemant, how is the index and Bank Nifty looking positioned ahead of expiry right now?
Good morning. See, I feel the way Nifty yesterday came below back 72 or 7150, and suddenly the rollover spiked up. It's clear indication that markets are still not, I would say still not in a frame of mind where they think that the market is going to have any sustained recovery on the upside, and that one can clearly see from yesterday's volume jump and the rollovers jump. And even if you see what is happening in next month, 7,000 put has the highest open interest, so which always if you adjust the premium will be telling us that 68, 50, 69 should be the next support levels. So if you are talking about next 2 days, I think from 7080 you will see some support coming in, and Nifty may try to show an expiry around 7150, 7180 if 7080 holds. If we do not manage to hold 7080, then we may have to retest 7000 in next 2 days only. So I think very important pivot level will be 7080 to be watched today. But overall, I would say that shorts continue to be rolled and the pressure is very high, and I feel that in next series we may have to first retest 69, 6950 levels before moving up ahead.
Right. Hemant, Prannoy joining in here. If you could briefly mention what the roll cost is right now and how does that compare with on a 3-month average basis, and given that, what inferences can be drawn from that?
See, roll cost is continuously dipping. That is one thing, and in fact, you can break up the roll cost because sectors which are slightly bullish, they are seeing still a roll cost which is above average. Because if you check out last 3 months average, because of the last month, the last 3 months average is already 0.32, and what we are seeing is right now is 0.10, 0.12. Positive is because of sectors like FMCG, pharma, where there are still some buying IT. Negative is that banking and financials, we clearly know that they are actually having a cost which is continues to push negative or down. So clearly the pressures can be seen there. But the cost will remain on the lower side. That is one thing very clearly seen, because maximum is shorts being rolled, and especially in high beta stocks, the cost is even inching towards negative side or even lower than the last month also.
Hemant, a word on the FII ratios as well. The call buying is to put buying ratio, that was at 2:1, almost 6 lakh to 3 lakh. You saw some bit of improvement in that in the previous weeks, buoyancy of 3.3%. But the call writing remains aggressive at 4:1, and that has hardly changed ever since the end of November till now, all through the series. What is your view there? The FIIs continue to hedge via selling in index futures and buying in index options, and maintain a bearish structure and extreme resistance seen at the 73-7400 call levels. I mean, all that premium is constantly eaten into every series after the first week is what we see. Is that trend by the FIIs, importantly, likely to continue?
See, one thing interesting in FI trend in last 4-5 days, I will put, is the way they have started selling index options. Now, yes, we can clearly see that yesterday also they have shifted at lower 72 calls they sold. Next month they are selling 73, 74 calls. But if they are not buying puts very aggressively, at least it gives me a comfort that they are thinking that Nifty may find a footing very close to current levels. That is why they are not buying puts. The lethal combination which we started seeing in the start of this series after first 2 days of rise was buying puts and selling calls. That's a very bad combination for us. And till now, till the time they don't start buying options again aggressively, I would still feel comfortable, because even if they are writing calls always gives limited profit. So they feel that market is not going to go much down. But if in next 1 or 2 days, if I see them again buying options very aggressively, that would clearly tell me that they are expecting VIX to cross 25, and that would mean even more bad for us. So that is one data point which we have to watch very closely. But till the time they are selling options or selling calls in particular, I am okay, because call writing always means that the person who is doing it expects a limited downside or a limited profit.
UBS this morning has downgraded Gale coming in with the target, if I recall correctly, was about 410 at this point. That's still has a massive upside to it, but they've essentially downgraded Gale. Ruchit, it makes it to your sell recommendation as well. Take us through the sell and the buy call that you have for us today.
So my first call is a buy in LIC Housing. I'll just take you through that call first. LIC Housing, we have seen that in spite of this stock price is correcting, it is now consolidating at the support range. We have a rising trendline support coming in, which is of medium to long term trendline support. Last 3-4 trading sessions, the RSI average has also given a positive crossover from its oversold zone, so which indicates that we should see a pullback move in the stock in near term. I'm not expecting resumption of the up move, since I'm not even expecting a big up moves in the markets. Overall, with the stop loss placed below 398, 434 is where the stock could test. So today, if the stock, after market opening, if we get around 412, 414 range, then it would be a good opportunity to buy with stop loss below 398 and target of 434. On the other hand, I've recommended a sell call in Gale stock. We have seen that after an up move from 270 to 350, the stock was consolidating in a range for about 2 to 3 months. Within this consolidation, it had formed a head and shoulders pattern again, which is a reversal pattern. The prices are showing signs of breakdown from this reversal pattern, which indicates that the stock again could correct in the near term. On the lower side, I have target around 300 in this stock, and one can short at current levels with stop loss placed above 331.
Alright, gentlemen, stay with us. We'll take a short break. On the other side, pre-open SGX is right now indicating a bit of a soft start. You're watching Street Smart Dealing Group. 2 minutes to go for the pre-open to kickstart. Trade 7100 is the number we're watching out for. In terms of stocks, PNB will be the first one. We'll track at pre-open today alongside with Tata Motors and Maruti as well will be in focus. We're in conversation with Ruchit, Jain as well as Hemant Shukral. Hemant, how weak are the banks looking into this expiry, specifically Punjab National Bank or even ICICI and SBI at this point?
See, I think nothing is changing much for financials. I don't see anybody expecting too much out of the budget also or any pre-budget rally, because if you see what has happened to Bank Nifty, it could not sustain above 14,500. In fact, I'm sure that in coming few weeks also, it will find a lot of problem to cross 14,300. We may have to retest again 13,750, 13,800 on the downside, and then start to move, then start to look for supports. See, the biggest weakness, if you can see, is in ICICI Bank. I always feel that it lays the foundations for Bank Nifty, and in last 4 days, it tried to cross 201 4 times, failed all the 4 times. I have a feeling we will have to retest 187, 185 again before checking out the resistances. Anytime ICICI Bank crosses 203, my view of short will be changed. So if you are going short, then I would be keeping a stop loss of 203 on the same.
20 seconds to go for pre-open at this point. Focus largely today on the banking sector. Given the concerns, there will be question out in the NPA report in Parliament as well that we'll watch out for. The SGX Nifty at this point indicating a sub 7100 start. Asia is quite quiet. Hang Seng has extended those losses ahead of our opening right now, so watch out for that. The rupee as well likely to see a bit of pressure coming in. It's a soft start but a positive one, and we want to wait for that to settle down and trade as well. So the Nifty at this point, ICICI Bank, that's the quote from yesterday, I assume 3.5% down is where it was yesterday. Sensex and Nifty both looking a tad positive right now, defying with the SGX Nifty, but we're going to wait it out to see how it really pans out in trade at this point. M&M down 2% is what we're seeing, but none of these quotes are stabilizing yet, so we're going to wait it out. Hero Moto, CLS has got a report this morning saying that they're most vulnerable at this time to earnings downgrade, so the Hero Moto will remain in focus today. Cipla, there's a note as well out. Tata Motors have got that big defense order coming in. There you go, that's the rupee 68.62, slight softness coming in. Sugandha Sachdev joins us from Relegate. Sugandha, how's the currency looking? It's really trying to break out of a range but keeping it quite tight.
Hi, good morning. Yeah, we're looking again trading quite weak, hovering around the 30-month lows. It's all because of the global headwinds that we are seeing, witnessing a lot of weakness coming in the Indian rupee. There's again risk aversion in the market, all because the oil price rally has kind of reversed. There has been a slump in global equities, and also the Chinese yuan has again softened against the dollar in the previous session. So all these factors are actually weighing on the Indian rupee. Plus, we have again seen some strength coming back in the dollar index. That's also, it is a negative factor for the Indian rupee. It's just that the range 68-70 area is providing some support to the Indian rupee as of now, but then I think eventually this level is likely to be breached and we are likely to head slightly lower from here. My sense is that rupee can edge lower towards a level of around 69.30 in coming days. But then as of now, the market would actually be eyeing the Union Budget 2016-17, and it can actually prove to be a big thrust to propel growth in the economic ecosystem at a time when there is current financial market turmoil and concerns about a slowdown in China. And it's a snowball effect in the global markets. So it remains to be seen how the finance minister will actually maintain balance between fiscal prudence and the market expectations.
Yeah, Sugandha, you talked about 69.30s. Sugandha, you talked about 69.30 in the coming days. Could you sort of define the coming days for us? Is this a view that you come in to say that over the next 1 month we could go lose about almost a rupee on the dollar rupee pair? And more importantly, do you expect us to stay there? Because does that signal further depreciation, or do you think that's going to be the maximum downside we test before retreating back to the 67 levels?
I'm actually looking at 69.30 by next month. Yes, it would also signal further weakness, but then I think there can be some respite in between. It would all depend on the union budget now and the cues that market takes from that. In case it can bring some cheer to the market, it would actually bring back some foreign investment in India and lead to some respite. But then as of now, the cues are slightly negative only, and I'm looking at 69.30 by next month.
Thanks for that, Sugandha. Sugandha Sajdev from Religare, they're talking to us about the downside in the currency. 69.30 is what they're working with, and it could potentially see more downside. That would take us to a record low. The Nifty, in fact, now under pressure, 7081 on the pre-open trade, as we are seeing. Hemant, talk to us about the auto counters, because Tata Motors in news today, but a lot of pressure on Maruti off late. The trend is really reversed on the charts. I was talking to Ruchit a little earlier in that. How is it looking in Bajaj Auto, where we've seen large rollovers as well? These two auto stocks coming your way?
See, auto I still feel has a better rollovers than financials in any way. In any case, and Tata Motors, we know the obvious reasons. Tata Motors DVR are coming back, news coming in, and the stock is now showing some strength back. So I have a feeling that Tata Motors will take support around 315, 320 in dips, and can move back to 328, 330. So it qualifies as a good pick. Bajaj Auto on the other hand has been showing decent rollovers and decent strength. And dips I would definitely like to buy, because ultimately it seems heading towards that 2480, 2500 zones. So Bajaj Auto also I would be looking for an opportunity to buy, but for me Bajaj Auto will go weak if it goes below 2360. So please keep a stop loss there. But definitely from the market perspective, I think auto, FMCG and pharma, they are the ones which are still seeing better rollovers than all the financials or high beta spaces.
Marico, Ruchit, then coming your way, stocks at a record high, and those are rare to come by in this market.
Overall, the structure is quite positive in this stock. We have seen this continuation of this high top, high bottom formation. Last 2-3 days it has also been backed, the up move has been backed by decent volume, so I think it would continue to outperform the broader markets. Again, correction up to 230, 232 would again could be a good opportunity to enter longs in this. Overall, on the upside, 245, 248 range is what I think it could test in near term.
Hemant, if you could shed some light on the FMCG counters that you're looking at, because ITC's got an excise duty trouble coming in and the market's a bit worried about that. HUL has the Patanjali concerns as well on the fundamentals, but any stocks in specific on the F&O data that you're looking at?
Yes, I was just answering that FMCG is showing more strength definitely than on the rollovers front than a lot of stocks. And especially I would like to pick up Britannia from the rollovers front. I really feel already 71% rollovers done. I think it will cross its 3 months average of 90%. We may do better than 90 this time. And clearly the stock has been an outperformer. So if it doesn't breaches 2760 on the downside, I feel 2850 to 2890 should be watched out as targets. So as a sector, very good rollovers in FMCG. Yes, ITC has its own problems, though I did not see any weakness creeping in HUL at all. But ITC has its own set of problems. But apart from that, Marico, Hindustan Unilever, Britannia doing good rolls. But I would pick Britannia just purely on the basis of rollover data.
All right, Hemant, last word from you. What's looking weakest going into March right now to you?
financials. I don't think there's anything right now which I can see apart from banking. When I say high beta spaces, you can put in capital goods also. But seriously, it's the banking which will drag again Nifty down. As I said, I am expecting Bank Nifty to touch 13,800 first and ICICI Bank 185. So these are the two which I will be watching very carefully, and I still feel they are the weakest link in the markets.
Hemant and Ruchit, both thank you so much for joining in today and weighing in on the cues for trade. You've got a flash coming at the bottom of your screen. The Prime Minister's called for a meeting of senior cabinet ministers today at 10:30 a.m. in Parliament ahead of the Parliament session. This also at a time where there is question hour for the Prime Minister today. It'll be debated to see if he actually responds to any of those questions, right? She takes the floor today. So that's going to be a big one to watch out for. The budget